Hello, I'm Kelly O'Byrne and welcome to LCG's preview for the week ahead. I'll be talking to our head of research, Jasper Lawler, to discuss Trump's team causing a crash in the US dollar, this week's Fed meeting and non-farm payrolls, ECB meeting conclusions and key Eurozone data this week, progress so far in US earnings season, and we'll also take a look at key earnings and economic data for the week. So starting off with corporate results, we have Seagate Technology and Lockheed Martin on Monday, McDonald's, Pfizer, Banco Santander and AMD on Tuesday, Siemens, Boeing, AT&T, Facebook, Microsoft, eBay and PayPal on Wednesday, Daimler, Unilever, Royal Dutch Shell, Alibaba, MasterCard, Alphabet, GoPro, Amazon and Apple all reporting on Thursday, and then Deutsche Bank, AstraZeneca, BT, Chevron and Exxon on Friday. Moving on to the economic calendar, on Monday there is US core PCE inflation. On Tuesday, Japanese inflation, German CPI and Eurozone fourth quarter GDP. On Wednesday, it's Australian CPI, Eurozone unemployment and Eurozone CPI and the Fed's interest rate decision. On Thursday, China manufacturing PMI, followed by the PMIs from Europe, the UK and the US. And finally, on Friday, it's non-farm payrolls day with US factory orders as well. So, Jasper, Trump's team have been making their mark on the dollar.
Yeah, that's right, Kelly. So it was Secretary Treasury Mnuchin who really made the biggest waves last week when he basically said that a weaker US dollar would benefit US in terms of its international trade. I mean, that is pretty much stating the obvious. A weaker dollar does make that country more competitive from a trade standpoint. But there are other factors at play as to why you might want a strong currency, for example. So it's a bit more overt than you normally experience from a Treasury Secretary. And we've heard similar comments from Trump in the past. And I think it's quite a big deal for the market. We were already in a weak environment for the dollar, partly as a result of similar comments in the past. And so we saw some quite dramatic moves in the dollar as a result of that. And I wouldn't be surprised to see similar comments like it in the future, supporting a kind of bearish trend in the dollar.
Mm-hmm. And so also we have the Fed meeting and non-farm payrolls. What role will they play in markets?
Well, in this context, they play a smaller role because actually the market's focusing on international factors like what the other central banks are doing, where global inflation and global growth is going, and a little bit less on domestic factors like unemployment and growth. That said, US growth does seem to be accelerating, so you want to see evidence of that because we're all kind of thinking of things now this year. Stock markets really had a good start, and a lot of it being excused by not only the tax cuts in the US, which should be pro-growth, but just generally global growth looks like it's picking up. So you want to see that supported. The unemployment data, again, you want to see it heading in the right direction, but it's like the trend of the most recent reports. Actually, it probably won't be the headline figure. It will be the wages, the average earnings growth, how that relates to inflation, and whether the Fed actually do end up hiking 3 times this year like they promised.
Yeah. All right. And Eurozone data this week, how does that fit in with regard to the ECB last week?
Yeah, so the ECB was surprisingly exciting, I thought. So we hit 125 in euro dollar. Yeah. Basically because Mario Draghi refused to join into what we're basically just referring to, a bit of a currency war. He said that the central bank doesn't target exchange rates. We know that already. But he also said that they're not going to change policy to benefit, they're not going to specifically go about a kind of policy that will benefit the European economy at the expense of other economies. So he's in the sense saying that Europe's not going to be touching this trade war. The US seem to be game for it. China, arguably, been manipulating their currency all along. So there's some big international players who are willing to engage, but Europe not so much. And so given that the euro is kind of lower than it should be on maybe a sort of purchasing power parity kind of basis, that gives rise to more strength in the euro. And so we've hit that big level 125. So, maybe that's a cause for a pause, but it's all quite supportive. And I think the Eurozone data will probably come out strong again next week. The only reason that can maybe cause this euro to slide off a bit is we're expecting inflation to continue to moderate a bit. So again, and the two things factor together quite well. The euro rises, that makes it that much harder for the ECB to meet their inflation target, and we're already starting to perhaps to see some evidence of that. That's why the inflation rate's heading lower, because the currency rate's going up.
Okay, yeah. And okay, so let's switch gear to US earnings. What are you looking out for this week?
Well, this week's huge. It's probably the biggest week of the earnings season, so there's lots of opportunities, particularly if you're interested in those big tech names. So obviously Apple reporting, Amazon reporting, PayPal, Microsoft. I think all these big tech names, there was talk at the end of last year that there was going to be a rotation out of tech. Doesn't seem to be much evidence of that. The Nasdaq's hit, 5, 6 record highs already, probably more. So they're going to be interesting. They're kind of typically the most volatile. So obviously if they miss, it's, they're priced to perfection. So you can see some dramatic moves there. But based on current trends, based on maybe how Netflix did and the increase of subscribers there, it's all looking quite positive. And we even see a couple of energy companies towards the end of the week, Exxon and Chevron. They overall, as part of that energy complex, are why we're seeing this uptick in and a general earnings kind of recovery. So it's all looking quite good, and there should be quite a few individual opportunities, I think, as well.
Great. Okay. Well, thanks very much, Jasper. And thank you all for watching. If you wish to see these videos and more as they're released, please follow LCG on social media.